where is this all heading? Where's the future of payments and the future of banking?
Oh, wow. I mean, that's a huge question, right?
Nick, thank you very much for coming on to the podcast. So my name is Marcel. I'm the CMO of Vacuum Labs, and I'm so happy to have Nick Kerigan from Barclaycard on to talk about fintech and the cool new things that are happening around here. Most recently, he's been the managing director of Future Payments. But I'll let you, Nick, introduce yourself. So how did you come to this role, and how did it all start? How did you get into this space?
Yeah, thanks, Marcel. And it's awesome to be with you today on this podcast for Vacuum Labs. I've had over 20 years in the banking and payments space, and 13 years of that most recently was spent at Barclays. And I really got kind of through Barclays into the strategy and then the digital payment space in particular. And the last 4 years have been spent leading innovation for Barclaycard. And we've got into building really exciting digital product experiences, partnering with fintechs, and driving cultural change inside a large financial services organization. So that, in particular, the most recent role, has really kind of immersed me kind of in this world, and it's a space I'm really passionate about.
Well, thank you very much. Wonderful. So during that time, what is the sort of like the biggest thing that you remember, like that really changed your mind around this fintech space? Is there something that really sort of shifted your view, or when you realized that this is now going to be big, this is going to be growing? Sure.
Yeah. I mean, I think it's one of those things where obviously you can read a lot of kind of market reports and see a lot of investment by VCs and all that kind of good thing. But it only really, I think, came home to me and shifted my mindset when we really started partnering with fintechs, in earnest, and really just understanding that the power of what fintechs can do. In Barclaycard, we partnered with over 30 fintechs, and my team sponsored kind of 10 of those fintechs from really early stage through the Barclays Accelerator program, and then into proofs of concept, pilots, and then ultimately partnership and investment by Barclays. And seeing what those fintechs can do in terms of the capabilities and what a really passionate, energetic team can do in solving a particular problem. Kind of opened my eyes and made me realize there was something really complementary to what a big financial institution can do, and bringing those two kind of skill sets together can be really valuable. Two of the fintechs we partner with included Flux in the digital receipt space, Crowds in the supply chain space, using blockchain to solve B2B supply chain problems. And both those companies really kind of showed, they picked a pain point they were passionate about solving and really went after it. And so, great teams and great solutions.
Yeah, I mean, you touched on a very important part of fintech. Like it's almost like a incubation place for things that larger players on the market either do not have the capabilities or the competencies to do. It's really a way for almost creating that lab for them to spin out those innovations that otherwise wouldn't be able to happen.
Yeah. Absolutely. And my message always to my colleagues inside Barclays was, don't be afraid by fintech. Think of fintech as the space that is doing all of this amazing research and development, creating solutions, testing them with customers and clients, and really finding out actually what those customers and clients want next. And as you see whether fintechs are gaining traction and not gaining traction, actually you learn a huge amount about the world, and you learn about a huge amount about unmet needs that exists in the market. And I think that's the power of what fintechs can do, because they can create these solutions, with real talent and really quickly.
Was there something when you were just surprised about, like, this is such a simple idea, why isn't anybody doing this? Do you remember something like that?
Yeah, I mean, I just mentioned Flux. Now, Flux is a really, in some cases, in some ways, a really simple proposition, which is digitize receipts, get rid of all this paper. And there's such an implication in terms of sustainability for the planet, right? Because Matty and Veronique, who founded Flux, they came into it from the passion of all of this wasted paper and stopping that happening. And that once you see that angle, you think, oh, that seems like really obvious. But then as you unpack the idea, what you realize is, well, that's great in terms of environmental sustainability for the consumer. It's also great for the merchant because they don't have to be, using all this paper in their tills and all the rest of it. And also then you can then actually get access to data in a different way because you've digitized the information on the receipt too. So you start to get into something that if you're in merchant payments, everybody's been passionate about trying to solve for years, which is about getting product level data and being able to do stuff with product level data. And that's where that started becoming really exciting from a commercial perspective as well as a sustainability perspective.
Absolutely. And, we've been sharing other articles back and forth as we've been talking about doing this together. And one of the things you shared with me was this whole initiative, which is sort of on that exact sort of wavelength or whatever we want to call it, which is now that we have this COVID crisis happening, now that we have, literally millions of people stuck at home not working, we now actually have the fintech community, or more specifically the UK Fintech community, putting together something called COVID credit. Mm-hmm. Can you tell me more about it? Like, because I really found the article really interesting. Could you share sort of your take on that?
Yeah, absolutely. And I think the first thing to say is, there are multiple examples of how the fintech community in the UK has really pulled together to help people. I've picked out a couple of those. I mean, I think COVID credit, got me excited because, the government in the UK has really looked to support employees, particularly in terms of their income and maintaining those income. But there's been, a difficult problem to solve around self-employed people and their incomes because those incomes can fluctuate a lot. But obviously they have the similar support needs that employees do. And so what the group that created COVID credit realized was that if they could pull together a simple kind of online solution that would allow income verification and then tap into open banking as a way of kind of confirming the data around that, then actually you could come up with a really simple income verification tool for self-employed people that then they could create a certificate to basically take to the government authorities and say, this is my verified income, can you support me on the same scheme, the similar scheme to what to what fully employed people have in the UK. What I think was great about this example was it was a collaborative group of people from a consultancy, a couple of startups, who came together over the course of really kind of like 48 hours and built a proof of concept for this solution that they were then able to go and demonstrate to the UK government and to the Bank of England and other kind of authorities. And so I think that for me was a really great example. One, because it showed, the power of solving against a real problem that people have, right? But two, how UK fintech is really very, really highly collaborative, and all of these people were doing it pro bono, right, over the weekend type. It's that kind of attitude of, let's see what we can create to solve this problem, which I think is really praiseworthy in the COVID credit solution.
Yeah, I mean, in a way, it's almost it's interesting in the sense that 10 years ago when the last crisis hit, that was when the sort of UK governments really started off with the FCA really opening things up, really sandboxing things out, so that the fintech ecosystem could begin to sort of be reborn or be born, because there wasn't really a massive one before that. And it's 10 years later, and it's the fruit of that labor, the fruit of that opening up of the government saying, like, maybe this is a good idea to actually bring in new players, is these players now going out into the market and helping out in this sort of unfortunate times. And it's not the big banks doing this.
Yeah, yeah. I mean, obviously, look, I worked for many years in a big bank, and the big banks are making their own efforts
Of course,
quite considerably too. But I think it's great how the fintech community has really responded and pulled together. Also, I have to giving credit to the UK authorities as well. The Bank of England, the FCA, and others have really been, open to ideas around how can we help people, what measures can we take to support the economy in this tough time. And also, you think around the industry associations as well. So one change we've also had over the last 9 days or so in the UK is raising the contactless payment limit from £30 to £45. Now that was implemented at unprecedented speed in the UK. And really, was another collaborative industry effort between the card schemes, the acquirers, the issuers, and so forth. But it's now up, it's running, and of course that gives people the confidence that when they can shop in store, a wider range of size of purchases can be covered by just that tap and pay solution, so they don't have to take the risk of entering a PIN and maybe being potentially infected from doing so. So yeah, a lot of collaborative efforts that are happening. I think the second article I shared with you, Marcel, was about another example of a group called Lightning Aid, and that's a really interesting initiative, because they spotted that group spotted a pain point around there are lots of mutual aid groups that are popping up around the UK to help people who have to stay at home during the lockdown, either because they're infected or they're vulnerable, and therefore they can't get out and buy the essential food and supplies that they need. And there are also, quite a lot of funders in the UK who'd like to be able to channel those funds to support those kind of people. But what's been evident is that there isn't a real easy end-to-end payments mechanism to help that group. So that group then formed from people in some communities, particularly Southwark and Bermondsey in London, working together with another fintech, Railsbank, who had a system that could power this using bank accounts and virtual cards. And so Lightning Aid is now out being piloted in those two areas of London with mutual aid groups. So they're able to put funding into accounts, create virtual cards, and then volunteers can go out and use the cards to buy food and supplies for those in need. And that team has, the Lightning Aid team has worked really fast to get that up and running, and actually, to be out in pilot and helping people in the matter of, less than 2 weeks, really.
Yeah, and that's once again an example of how sort of these innovative fintechs that have come in post the sort of last crisis that we've had, and come in with solutions that are extremely fast to market. So you mentioned Railsbank, like building on top of Railsbank is extremely simple. You basically sign up and you start building in the sandbox. By the time your developers are done coding the initial mock-up, you've done the contracting. You're really working with real money immediately. And this wasn't possible. Like when 12 or 13 years ago, when I started playing around with banking APIs as a developer, like it was, how many things do I need to sign? Like I just want to play around with it. Come on, guys, make it simple for me. And it's the infrastructure work that was laid over the past decade that is really now helping this, and I'm so glad that it's so fast now. Like literally, so 2 weeks, right?
Yeah, and you look at those the things that, for example, the system that Railsbank has, they can spin up and millions of accounts and virtual cards really quickly, and so work at scale. So I totally agree with what you're saying, Marcel. It's that infrastructure is being created and now is being put to really good use. But it's not only the ability to do things in small scale pilots; it's also the ability to scale that really quickly, which I think is particularly exciting. And that speaks to the flexibility of the kind of tech stacks that most of the fintechs are working on and have built upon over the last few years.
Yes, absolutely. But still, it's still curious how even like these sort of very fast moving innovations, they're still using like these standard or very standard, like Visa, MasterCard, FPS, these rails that were put in place years and years ago,
Mm.
it's decades now.
Yeah,
Um,
yeah,
but it's still possible. Like that's quite unique. Like it's a merger of that like old
yeah.
school technology. I mean, it's probably fair to say that Visa and MasterCard are old school at this point, and merging that together with the new tech. I think that's really like unique in a way that we haven't seen before. And now, it's like the crisis has really tipped over that situation and enabled all these changes to happen so fast. So I'm
Yeah.
still amazed by how many things are possible when you're just not having too many meetings around them. Like it just happened.
Yeah, I think that's true. And also I think it gives a real collective focus for things for people to solve, right? And I've also written about this as well. It's also a radically forced change in consumer behavior, right? I mean, we're all like, pretty much all sat at home, working from home.
Yeah.
As you said, fewer meetings, but also, we've had to change and adapt really fast in terms of our work behaviors, our sort of lifestyle and spending behaviors, our payment behaviors as well, right? If you saw, I don't know if you saw, sort of about 10 days or so ago, Link, the ATM network in the UK, reported that cash withdrawals and transactions were down about 50%. Since the crisis hit, 50, not 15, right?
Yes, it is.
And it's a huge shift, because then people are worried about cash. Shops don't want to take cash. They're encouraging tap and pay, but then there's also a real growth in e-commerce, and particularly e-commerce with delivery services, because people still have, if they have money, they still have needs that they want to fulfill, right? They want to get their food. They want to be entertained when they're sat at home, right? If you're sat at home a lot, also, you might want to improve your home environment, even in small ways, like, ordering new pot plants or something like that, right? So those types of businesses actually, experiencing huge growth. So we're seeing very different disruptions happening across the economy. And then if there's big changes in how and where people are spending, then there's big changes happening in payments too.
Yeah, well, it's interesting that you mentioned that, because I've noticed that in my personal spending, this is week 5 of quarantine for me, or quarantine, lockdown or partial lockdown, that I've been working from home. And the thing that I noticed is, I mean, I'm still paying for stuff. I'm still going out and buying food, like maybe once a week, or I'm having stuff delivered to me,
Yeah.
whatever that is.
Yeah.
And the interesting thing now is that I have much better transparency over what I'm spending money on, because all those services have nice data associated with them, whether that's a Revolut card or another bank that I may be using. I'm no longer using cash for anything. So there's none of that, like, oh, wait, where did I spend that, $50? So where did that go? Like, that sort of thing, it's gone completely over that past month or so. And I can actually tangibly feel, like, when I open up my bank account, like, it's very clear what the spending is and what category it fits in. Whereas before that, like, all the PFM functionality in the world doesn't actually always figure out where that one particular spend is going into. So it's almost like my PFM, or whatever the personal finance tool in the apps, is becoming more, it's not necessarily smarter, it's just now more clear, because the data is clearer, because I'm working with partners and companies that are more digital and provide more detail with their transactions. And it's clear to me what I'm spending money on. So it's a big shift in that way, away from cash. That's quite unique. And I don't think we ever saw that, because digital payments have only been around, what is it, 50 years?
Yeah. Totally. And the digital, like, what we would call the digital pays, being able to use your mobile for that's only been around a few years or so, right?
Yeah.
But those, being able to shop in that way, using those digital pays or on e-commerce sites with your card stored, that actually becomes the real growth area through this kind of crisis, because pretty much all of the services that you're using to order stuff from home are working in that way.
Yeah, absolutely. I was just reading recently, and I shared this article with you, that actually the transparency over data and how small businesses understand their data is often hard, because the banking interfaces, as they're innovating, the fintechs are innovating mostly in the sort of B2C space. They're sort of helping regular users spend their money in a wise way. We just recently had Cladara on the podcast, which also works on top of Railsbank, Christina. And Brad will also be on soon if you know him. Yeah. We sort of, they're trying to solve that problem of understanding, getting clarity over subscriptions and managing your own subscriptions in your company. But there's this unique thing that I've been reading about, that Plaid is now partnering with Microsoft to enable seeing your banking transactions within Excel, within, I guess, PowerPoint, if you really want to do that, really getting that data in there, which seems once again like one of those no-brainers that you would say, you would think like, well, obviously I have a large business, I want all the data in one place. And in fact, at my company, we actually made a shift a few years back from having multiple banks to just having one, so that we could have that clarity in one space and really manage all that money centrally. Do you think this will be a feature that people will use, or is it too early for that?
I think for a small business, right, most small business people, particularly at the, if you like, the smaller end of small business, they're time strapped, right? They're time poor, and they want to be spending their time generating revenue. So the admin of running the business is something that they want to make as easy and automated as possible. So in the UK context, we've seen that, the growth of business accounts. So, for all the way from news business banking services like Tide through to challenger banks like Starling creating their own specific business banking service. Incumbents, responding to that and upgrading their services too. So actually small business has gone from probably one of the less competitive ends to one of the more competitive ends of the market. And all of those services are then looking to integrate with other services that people use to run their small businesses. So like integrations with Xero and accounting packages. So yeah, I can see for a small business, the ability then to integrate with Excel and have the data displayed in Excel. Yeah, it's pretty compelling. And I think, probably small business owners would be willing to pay a small amount in terms of a subscription to access that functionality. Having said that, I do think also we're only going to be able to see whether this service is going to really be value added when we actually get to see what it looks like, because there's a lot of devil in the detail around it now. Because if it's like if it's like basically a data dump, then there's effort then involved in recategorizing and sorting it and manually adjusting it. And that becomes less attractive. On the other hand, if Microsoft's done a great job of, understanding that data and then can display the information to a small business owner in a really smart way, then I think, without them doing very much, then I think it becomes really, really powerful for them. The other side of it is, I saw that Microsoft is looking to also to sell this to the service to consumers. To be honest with you, I can see a consumer niche who might like this, but equally, I'm sort of slightly skeptical as to whether consumers will pay an additional fee for it. I don't have insight into how Microsoft's going to be, really charging for that, whether it's going to be within the overall Office suite or whether it's an additional service to pay for. But I think consumers are much more likely to expect that it's just included as functionality within what they get from Office, rather than paying more. Whereas I can see small businesses being willing to pay more to get more value there. What do you think, Marcel?
I mean, the thoughts are probably around the same. Like it always comes to, how is it actually going to work and how are the functionality? I mean, I saw some people sort of guessing, and apparently there's also some additional detail that they've shared with some people. But in general, in the consumer market, it's very unlikely that somebody will use it day to day unless they're already managing a lot of their finances in Excel specifically, and in a specific format, right? Within the sort of small or very small businesses, I can also imagine them managing their expenses in Excel or something like Google Sheets. So having the ability to now pull in the data from my bank account instead of, dumping data as a CSV or an Excel file from your internet banking interface, bringing that into Excel, then copy pasting, syncing it. Like, you have to have this very specific either need as a business or a need as an individual to be managing on such a high level detail and categorizing and doing all of that. And to my knowledge, most people don't do that. And that's why there are so many fintechs trying to sort of disrupt that sort of PFM space, which is like actually understand what you're spending your money on. Which is
yeah, and it's really, it is a massive industry, and and that makes me, what you say, Marcel, then makes me wonder actually where in the future will those PFM tools reside for both consumers and for also for small businesses, right? Will they sit in something like an Excel? Will they sit in more of an accounting type solution for small businesses like a Xero or somewhere like that? Or will they actually sit on the banking app side? For the consumers, I think we're getting now quite used to having, particularly, from challenger banks, but also increasingly from incumbents, having quite good PFM tools sitting really inside your app or web portal. So, I'm not sure we're necessarily going to want to go somewhere else to be able to do that understanding, unless we're already, as you say, using Excel or Google Sheets, and so we're sort of really actively budgeting from that application.
Yeah, I mean, one of the things that we're now seeing is that multiple banks or multiple either challenger banks or even these incumbents, they're all trying to hit you very early and get you into the banking space very early. So recently, and I think I shared this with you as well, was the Revolut Junior version, or Junior, Revolut Junior. I think that's the official branding for it. And it's really just a way for Revolut to not only bring you in as a customer very, very early on, but also give you the sort of tools to start managing your finances in a way that you understand as a teenager more than, like it was when I might have been like 15 or 14 when my dad brought me into the bank, like literally a bank. And it was like this old school thing, like there was a lady there and it's like, here, son, this is a bank teller. She will do things for you. And this is before the time when there were any sort of, I think I might have had like a very, very early version of like an internet-based access, which just gave you like a dump of your data. But it was like, here, son, sit down and listen to the lady on how you're supposed to, work with your account. And here's this weird card that you've never heard of before, and you're now getting it, like all these things. And that's no longer happening, or at least it's happening a lot less than before, because right now it's not happening at all because of all the Corona stuff. Or at least some of the bank branches are closed. But it's really having that shift to digital. And I mean, we can call Revolut a fintech, or we can call them a challenger bank, or we can just call them an incumbent at this point. But how do you think about this? Do you think it's wise to have this for young kids, or would you do it in a different way, or what's your thinking here?
Yeah, I mean, this is going to date me, Marcel, because I remember my first bank account being literally, it was one of those pass books that they had, and initially, actually, it was the teller who wrote in the book when I went into the branch. When I was a kid, it wasn't even that they printed stuff on the book; it was like handwritten entries in a book, and it was like the first savings account that I got set up with. And we used to have like the piggy banks that banks use, physical kind of things that banks used to give out as part of their child accounts, and then you could put your coins in it, all those things. So I do think there's a real value to have for children to learn from a young age about the value of money, and about money management, and about budgeting, and those kind of good things. So almost like I see Revolut's initiative here as a kind of almost like the latest kind of digital version of those kind of things. And clearly that that's how Revolut's positioning itself here as well is about almost like an educative tool as much as anything. And I think that's actually a great positioning to have. There's this use case around what I almost call it like parent-child use case. It is a powerful one. And you know, other specialist providers have been doing this for a couple of years. In the UK, for example, we've had something called Go Henry, which has been active for several years, and you know, a number of my friends use that with their children, and they can set up, you know, a segregated account and a card that the child can use to spend. So, and have an app on their phone and all this kind of good stuff. So, I think it is a good innovation. I think there's probably, and I haven't gone deep into how Revolut's doing this, but there's probably quite a lot that needs to be worked through underneath. So, you know, about how, for example, Revolut understands what consent the parent has given to the child, for example. You know, you can obviously give a child with a card or digital card with some kind of spend limit on it, but ultimately that child can then use that card kind of for whatever they like. Now, then, presumably in the Revolut app, you know, as a parent, you can put some controls around that, you know, in terms of categories of spend, and whether it's used online or offline, all of those kind of good things. But I think in this use case, as you go underneath, there's quite a lot of legal, regulatory complexity, and so, you know, I hope that Revolut has kind of thought that through as they've gone into this space. But, you know, as a first kind of pass, I really do like the positioning around educating your child and kind of getting them, you know, used to and getting them ready for sort of almost like this sort of, you know, the adult world in payments.
Yeah, you're right. I mean, for me, like locally here, a local bank had this promotion where they had the option of getting a special Batman themed card. So it had like the Batman logo. It looked very sleek. It's this nice black card. So I walked into the brand. I was like, I like that card. I'm a big geek. Love comic books, love movies. So it's like, I want that card. Like, sir, but that's a children's card. You can only get that if you have a child. So I was like, so that was around the time when we were expecting my daughter to be born. So I came back the year later when she was already alive. She's like, I have a child now. Can I have the Batman card? Like, well, we no longer offer the Batman card. We now have like a Looney Tunes card, but you can only get a card issued to a children's account once they turn 7. And only then it's still your card. So I was like, okay, well, I'll see. I'll come back in 7 years to see if I can get that card. But the fact that you can now get sort of personalized cards or cards that have this sort of branding to them. Recently, or not that recently, but fairly recently, when I was walking around Hong Kong and Singapore, like multiple banks there actually use a lot of that. So they have like superhero themed cards or that sort of thing. It's really that co-branding, even with like DC or Marvel or all of that. And the US is also full of that. Like these co-branded cards, they're usually credit cards.
Yes.
They're all very like this, like they're very much designed for that niche. But not only from the visual perspective, but also giving you specific discounts or specific benefits. So I think I checked out the Marvel card. The Marvel card is essentially just, it gives you discounts on the store and then gives you like invites to special events and that sort of thing. Nothing special about it. It's just a regular credit card. There's nothing, even the APR is sort of like, okay. But that's why I'm curious about, what do you think about sort of the future of these co-branded relationships with banks or financial institutions? Do you think that will continue to happen? Do you have a sort of theory on how that will move?
I mean, the co-brand space has been for a number of years quite different between like the US and Europe, and essentially that's kind of because in the US. The higher interchange rate means that you've got more value there to play with, and therefore more value to put back into rewards or other experiences that support the co-brand and a kind of affinity type proposition. Barclays actually is one of the biggest co-brand credit card issuers in the United States. And that co-brand business has seen considerable growth over the number of years. What we saw was consumers actually really like the affinity that they have with those cards. I mean, you mentioned Marvel. Barclays has relationships with like NFL, LL Bean, US Airways, a lot of sort of major partners that where people have an affinity to, either because they're collecting the rewards or they just love the brand. And so I do think in that context, that works. I think in the European context, it's been a little bit more challenging. You haven't seen so many co-brand credit cards since the interchange fee regulation came in, because there isn't so much value there. You have got personalized debit cards. I mean, Barclays has done personalized debit cards in the UK for a number of years. So you can like choose your image and send it in and get your card with that image on, whether it's your favorite brand or whether it's your child or whatever it is you want to have on your card, you can, within reason, you can have on your card. And consumers really, really like that. I can see in the European space though, maybe some potential return of more co-branded cards, because as those cards become more digital and you don't have to produce physical plastic, then the economics work better and you can more rapidly, create kind of interesting co-brand cards that you can then load into, say, an Apple Pay or a Google Pay. Card art actually, in that sense, becomes much, much easier and cheaper because you don't have physical plastic and all the costs around that. So I can see potential for some, return of co-brand cards in Europe too. And I certainly think there is value to creating an emotional connection between the customer and their card company or bank. I saw, I don't know if you'd seen this, Marcel, but I saw one of the challenger bank that's based in Amsterdam, Bank, recently did a metal card that's positioned around green and sustainability. So with this card, for every €100 you spend, they'll plant a tree. And you also get a metal card because that lasts a lot longer than plastic and so is more sustainable. And that seems to have had really good take up, and particularly impressive because actually you have to pay a fee to get that card. So it's not a free proposition. But they seem to have had thousands of users paying to pick that up. So I think that's one kind of signal to me that maybe the specializing in these cards, getting them to be cards that create an emotional connection, has some kind of future to it.
Yeah, that reminds me of Duconomy from the Nordics. They're doing this nice little sleek card, which basically tracks your carbon footprint and tells you, sort of based on your spending patterns, how much are you contributing or not contributing to the welfare of the world, and then sort of give you opportunities to offset that with carbon credits. So it's this unique, and we've seen many of these sort of over the past few years emerge, really focusing on these niche opportunities where it's very much focused on solving a particular problem for a particular group of people, as opposed to solving things for the common denominator of the market. So where's this all heading? Where's the future of payments and the future of banking?
Oh, wow. I mean, that's a huge question, right? I think what this speaks to, what we've just been talking about in cards, speaks a lot to personalization and the expectation of personalization at scale, which we as consumers, have now. We've learned that from a lot of digital brands, and we're now expecting it in our financial lives too. The kind of know me, but then also adapts, to provide the solutions that are really relevant to me and that I get from both a not only left brain but right brain perspective as well, right? They are my services. So I think personalization has been a buzzword, but is actually a real trend. I think that links in very strongly to the digitization of payments. as we kind of talked earlier, I think digital payments will get a real big push from this crisis. So cash to contactless and other cards, but then also physical cards to digital solutions and digital payment methods. And I think we're just only now really seeing how the power of, the mobile that you hold in your hand can be used for payments and creating a much better experience around that. Not just simply it can do the same thing as a card, but actually how a digital payment solution can really do much more than a card can. Whether it's around location, whether it's around data and therefore giving me insights about my spend, whether it's kind of tailoring or personalizing experience to me, creating an emotional connection. All of those things, I think, start to come together, around a future that's much more convenient for consumers, but also much more tailored for consumers.
Absolutely. Like recently, and I'll share this with you, I wanted to do it before. There was this absolutely fascinating article about how that what you just talked about is really just stage 2 of sort of this fintech growth. Yep. Stage 3 is really embedded finance. It's about keeping things, like hiding things under the product that is on top that you wouldn't expect to be a fintech.
Absolutely.
Yes. So tell me more.
Yeah, I mean, Matt Harris, who runs Bain Capital Ventures in New York, is somebody I know and respect a lot. And he wrote some really excellent pair of articles back end of last year, talking about embedded payments then becoming embedded finance. And payments tends to be the sort of the front runner, if you like, in innovation in financial services. So what happens in payments then often happens in the rest of financial services too. And what I really like about the embedded payments kind of idea is that payments and finance becomes embedded inside all of our service experiences. And you're starting to see that happen. So Uber, for example, in the US, is creating a whole suite now of Uber Money solutions that it's providing to its drivers, right? So you've got essentially a car rides company that's got in principle that's got nothing to do with banking, payments, financial services really, but they actually saw the potential of this early. So they've had a card, the Uber credit card, out to their consumers for some time, but now they're moving to the other side of the ecosystem and recognizing that their drivers have considerable financial needs too, and how can they provide solutions to them. So they're going from you're driving for us to let us provide banking and other financial services to you as well. And so that's finance embedded inside the Uber the Uber proposition, both for consumers and for the drivers. I think, to be honest, you'll see a lot more of that activity happening from service companies, particularly digital companies, as we go forward. I don't know if you agree with me, Marcel.
I'm absolutely on the same boat. Like, this is when people talk about fintech, like, we're starting to hear sort of the repetition of, well, why build another challenger bank? Why build another fintech PFM? Why would you do that? Well, part of the answer, I think, there is you're not really building a challenger bank. You're enabling a particular group of people, niche. I mean, we've sort of, with my colleagues and sort of at some conference, we've been talking about this as tribal banking. So this is like the next phase of banking, which is focused on tribes as opposed to on, demographics or something. Like, we have a financial services app for 20 to 30 year olds. Okay, sure. But how many 20 to 30 year olds do you know that are absolutely the same? Well, almost none. The age and the blue-eyed 20 to 30 year olds, well, they're all different. So really going towards that tribal aspect in a positive way, and making it not be exclusionary as the word is often used, but rather inclusionary. Like we have global tribes of people. Like this, I always use like obscure references, like fishermen living in Kansas that really love wearing red boots. If we can make a financial services product for them that really works for them for whatever reason it is, that'd be awesome. And we've seen that with community banks. We've seen that with credit unions in the past. Europe isn't that big, depending on the countries. A lot of the community banks consolidated into these large banks. You have the Volksbanks of sort of Germany and Austria, sort of in where I'm sitting right now. But you have these community banks sort of almost disappeared or are sort of hidden behind these large ones in Europe, but they're still considerably strong in the US with very specific even legal status compared to the large ones where they can have certain benefits that large banks don't. So in my view, it's not about the next challenger bank, not the next fintech, but it's rather about the next thing that solves a problem and makes somebody progress in their life, in their, whether it's the person using Excel to manage their finances, or it's the person that is teaching their kids how to manage money. It's not about the bank, it's about the solution that you're providing, or rather the progress that you're enabling. And that's sort of why this whole idea of integrated finance or embedded finance, payments, or whichever word you want to use, it's really about empowering those people rather than making them, okay, well, I need to do this. So first I log in here, and then I log in here, and then I copy paste from there to here, and then I use my app to validate it through some biometrics. It makes the world complicated. And
I love that. I love that phrase that you just said about tribal banking, and if those tribes can be are identified by the affinity that people have to those other people, and they can be self-generating, then I think it becomes kind of really, really powerful. I think then also you can create an experience that works for that tribe, which is probably largely digital, but then you can, with the tech that we have today, you can then consolidate the back end behind it with the infrastructure, so that it means that you can deliver that experience in a cost-effective manner, which is a kind of big difference from where we've been in the past. I'm also with you on that. It has to solve a real problem to help people in their lives. I think one of the biggest things that you see at the moment is that our lives have got really, really complicated. Like you mentioned the Excel and moving across stuff, for all the stuff, the innovation that's happened, it seems to actually, in some ways, made our lives more difficult to live rather than easier to live. And so I think that at a macro level, the trend for actually giving people back convenience will remain incredibly powerful. I mentioned Uber earlier, and Uber's used often as a bit of a buzzword in tech. But what I do like about what Uber has done is it just made that whole taxi and ride experience incredibly easy and much more convenient, and it played on the convenience much more than the price aspect. And I think if you look at a lot of these digital services, yes, they have to be price competitive, but actually it's convenience that's in the lead in terms of whether people will come back and use those things regularly and really develop those behaviors of regular use and advocacy around it.
Absolutely. Like, you said Uber. Uber, the way I see Uber is that it's actually not really the core proposition that they provide isn't actually the travel. It's the time that they save you from finding the cab, getting you to the place, all of that. It's saving you time. So whatever we can do to save people time in whatever it is that they're doing. And, we have to be honest with each other. A lot of what banking and payments is doing up until today, a lot of that, go here, go there, do that. And then, contactless payments came around, and, us in Europe we were somewhat used to it with the contactless cards. In the US, when people came in with the Apple Pay thing, that was like magic. That was like, what are you guys doing in Europe? Like, this is absolutely incredible. And at that time, I've been back and forth from the US paying with my contactless cards on the terminals that supported it. And it was fairly normal for me. But really, these innovations that come in, these leaps, They save so much time, and they're actually they're more secure. They enable you to not have to touch the pin pad now when everybody else is touching that pin pad. All of that, like I love the fact that we're sort of at the stage where a lot of the early innovation over the past decade is now starting to pay off, and we're seeing these things like Lightning Aid that you mentioned, or COVID, what was the name?
COVID credit. I think with the time as well, it's not just, it is time, and that's really powerful. I think along with time, it's also mental effort. Yeah. So like the Uber thing, right? Where am I going to find the cab, right? Have I got enough money with me? How long is it going to take me to get to the other end? What do I do when I get there? It just takes away all of that mental effort. So yes, absolutely, it does save time, and time is a big deal for everyone. Yeah. But also the sort of ease around the ease and convenience of just like not having to think about that stuff and be able to solve the sort of end-to-end problem in a really elegant way, I think is equally powerful.
Well, I think we just touched upon the massive question that is, what's the future of finance and banking? It was wonderful talking to you, Nick. It was really fun going through all these topics, exploring where we are today with the Corona crisis, where we're going to be in the future potentially, and how all of this will affect us, especially in these sort of times of crisis when we don't really know what's going to be happening 2 or 3 months down the line. We're still guessing, but we're seeing some great innovation and great small companies or smaller companies doing what they can to get through this and come out the other end much stronger, or at least much more smarter than they were before.
Absolutely. And it's been a pleasure to join this, Marcel. Really interesting discussion. Thank you for having me.
Thank you, Nick. And before I let you go, where can people reach out to you if they want to talk to you and find out more about what you're doing?
Yeah, so 2 main places I'm on, LinkedIn, Nick Kerigan on LinkedIn, or on Twitter, Nick_Kerigan at Twitter. And I also write a monthly blog that I share on both. So if you want to find out more in terms of direction of thinking, some interesting topics, check out the blog as well.
All right, and you'll find all of these in the notes of the podcast or video or wherever you're watching this. So thank you everyone for listening. Thank you, Nick, so much for joining me today, and hopefully we get to talk soon.
All the best.
All the best to you, Nick. Thank you.